is good, y'all? It is Havoc, aka the man, the myth, the legend. What a fucking day, bro. This is what trading is about. This is when you've put in the work, you've put in the time, and you've hit all of these setups, this whole model. It's a day of rejoicing. But let's get into it. Let's break it down. I put it into replay mode just so we don't have all this price action to the right. I'm trying to declutter it as much as I can. You can see me execute all these trades right here. Now, I didn't execute all of them perfectly for numerous reasons. I got kids running in the background and I get distracted. Sometimes I get a late entry because of that. There was one time I had to go, you know, discipline my kid because he was throwing a tantrum and I had to mute the mic. So, I don't always get the perfect entry because of these things, but nonetheless, I get most of the moves. And there was probably two more setups you could have found. You could have played the 9:30 opening. It was you would have had to get ballsy, right, and get a late entry, but you could have scalped roughly 35 to 50 points from the entry. I'm not going to get into that though. I think near the end of the day, there was another little reversal you could have caught that was very nice for 50 plus points. But I'm not going to break that down either. We're just going to go through this. It's all pretty much the same, even if I go to the one later in the day. It's the same setup, so this is the model for the day. And we're going to start with setup one. Okay, it's all color coded. You can see it, the numbers correlate with the color. Okay, on the chart for the setup, each setup. Right here, setups two, right here, setup three. If you just use these signals I give you and you use some logic, okay, you just use some basic brain cells, you can figure out how to make money going up and going down. And if you really, really want to push it, you could have started at the 9:30 opening and went on to the close of the day. Okay, so let's start with setup one. And I don't get greedy. I take my 50 points or a little bit less if I get a later entry. All right, I take it. That's fine to me. Could I have got more? Sure. If you can get to that point to where you can understand perfectly how many points you can score, that's great. But just start with 50. Just start with 50. And ultimately, that's roughly 150 points. Okay, so setup one. 9:30 open, roughly around here. We start working down. Okay, we hit a higher time frame. PD array gets tapped into. We also take a prior day low. I believe it was a fair value gap on the daily time frame, if I'm not mistaken. If I'm wrong, it doesn't matter because, like I said, we took a prior day low, which was Friday last week. Okay. Two, we create this inversion right here. Okay, so that's another signal. Now, because we tapped into a PD ray, I didn't get this entry right here. Okay, the advanced market structure shift. I got this late one right here. I played it very safe. I have new funded accounts that I can't be getting too crazy with. But it wouldn't have been a bad thing to get in here because you'd been close to your stop. You wouldn't have taken too much drawdown. You wouldn't have taken any, right? But coming to the charts late in the morning, I just needed to settle in and see how things were going to play. And I decided, okay, if I miss this, it's all good. I have this one to play, this market structure shift. And then I realized, like, okay, we might get in late here. We can play for 50 points. But even if I miss the breakaway gap, guess what? I can double dip. I call it the double dip setup right here. I love this setup. It happens like once or twice a week. Easy money, little to no drawdown as you see right here. But let's not get to that just yet. So you could have gotten here at this inversion, tapped in. You probably would have had to tap in on this third candle, or yeah, roughly this third candle after this one closed. You could have taken a risk here at the third candle of the bullish fair value gap. It's up to you. You could have gotten an entry somewhere in here if you were confident that we hit that higher time PD array and you saw that inversion, which would have been an advanced market structure shift. Okay, so I didn't get in here, but you could have. Three, this is where I got in. Boom. As soon as we closed, I put in a limit order. We come back down, we tap into it, we go down. My stop was all the way here, yeah, believe it or not. But guess what? I did not over leverage into this trade. I was trading one MNQ. We came down. I figured if we're going to make a run for this 50 points, we're probably going to come up, back up here, right? And so I added another limit order here that put me in two micros. Okay, from here, little to no drawdown, and we move up. We hit our take profit at 50 points. Now the reason why I had my stop all the way down here was to give me flexibility, because my mindset was like, hey, we have one, two, three, four gaps. Okay, pretty much unfilled. We filled one of them right here. Okay, we filled one of them, but there's still potential. You never know. It could trace back into all the way back to this first fair value gap. Okay, the inversion. It could do that. I've seen it do that. I've experienced it do that. So that being the case, I know this is a strong low. Okay, but now I need to get flexible and creative with how I'm going to build this position. Build your position. Okay, take one here. I can handle $50 a drawdown or whatever. Okay, even though this came down roughly like 31 points. That's why you don't over leverage. Can you imagine if that's an NQ contract? Just one? You're taking a beating on a 50K account. Don't over leverage. Put a micro on. Okay, let it nature take its course. Let it run down as much as it needs to run down. It could come down here, it could come down here, it could come down here. Have a limit order right back here, because if we get back here, that means we're probably going to want to move higher. Okay, and you don't have to take too much drawdown right here. Okay, but if it wants to come somewhere down here and fill these gaps, I'm going to add to my position. I'm going to add to what is a perceived loser. So if we come down to this gap, I'm going to add one more contract. If we came down to here, I'm going to add another. And my maximum contracts I would have put on the micros is 5. So I would have found a way to get creative, adding 5 contracts in here and have flexibility. Now ultimately I believe this low is going to hold. So I would have built into my position if it did come down here and retrace. I would have had a nice take profit, right? But I only had 2. That's as far as it went. No big deal. I'll take $200. Easy money, right? And I'm playing it safe. I'm not risking my new account. And I can work on an evaluation. So that was the first move. You could have run it for 50 plus points. You pretty much took profit at low hanging fruit. Okay, and I'm not a partial guy, but you could have had multiple positions. You could have had left one running until you got a reversal signal. So you could have had one entry here, take profit at 50, and then let a partial or let a runner on. Okay, until you got the reversal signal. And because we had this breakaway gap right here, which sets up for the double dip. Okay, that's what I call it, the double dip. Now, say you didn't want to take an entry here. A lot of people don't want to take an entry here because they don't know how much drawdown they're going to have to take, right? From this low to this market structure shift, right? That's a big distance, right? And that's what makes it tricky to play this setup. That's 100 points. Where do you put your stop? How do you know if it's going to pull back deeper? Well, we know this. This is a strong low. It's going to hold for a while until we at least hit 50 points. And we know this. If we decide to come to one of these, why not get on the micros and build our position and stay flexible. You know what I'm saying? Stay flexible. I can add here. I can add here. I can add here. We have 1, 2, 3, 4 gaps. I can add 3 more contracts along the way in these gaps. Build a position, or 4, whatever. All right. We're going to hit those 50 points before we get back to this low. But if you missed this entry and you missed that entry, or you didn't feel comfortable taking it here, that's all right. I always tell people, if you have a breakaway gap that's clean, untouched, There's going to be a double dip back down here. There's going to be a move back down. It doesn't always come within the session that you're trading initially. Could come later in the day or the Asia session. But you know when it gets back down here, you're going to get to run it for 50 points easy. But let's use some logic. We come up here, we hit a higher time frame PD array. Okay, you go look on the daily chart, you'll see it. 2, we get the inversion at the purple. 3, an advanced market structure shift. Okay, 4, we place our stop at the high. 5, we're aiming for 50-point take profit. Now we're confident in this because we know we have this breakaway gap that needs to get filled. So our logic is, man, 50 points should happen fairly easy. This was a nice, easy, clean setup. Even if you missed this whole move, you had this one. Okay? You had this one. And by the way, this one pretty much occurs right here when we get this market structure shift at the silver bullet. Okay, this one occurs a little bit later in the day. Okay, the next hour. But this is a beautiful setup because the advanced market structure shift is not far from the inversion, as opposed to this one, right? It's 100 points away from. There's no advanced market. I mean, there was, right, when we closed the inversion, technically speaking, but sometimes you get these lows, okay, higher lows that you can play off of, and it's right next to the inversion, as you see right here. Easy work. Easy entry. Entry could have been anywhere from the yellow line to the purple. Okay. And you got tapped back in after this third candle printed. Easy entry. Write it down for 50 points. Okay. Maybe more, because if you're confident that it'll get back down and during the session, you had a nice plus 150 points. Yeah. But like I said, I keep it simple. I just get my 50 points. It's a consistent way of just always getting your target. All right. So we know that this signal's probably good because we got to come back down here. And what do? We come back down here. Simple logic. Okay. We come back down here. And there's always going to be two gaps. Okay. Right here, the breakaway gap and the gap above it. When we always come down to this second gap above the breakaway gap or below, we're always going to have a little bit of inversion. We had an inversion right here, but guess what? It's not going to hold. You could scalp it for like 15 points, but not worth it. You can catch your money right here. But this is usually what happens. You're going to get this bounce off of the second fair or the fair value gap above or below the breakaway. You're going to get this version. It's not going to hold, and it's going to come deeper. Okay, and it's going to tap you in right here. Where do you put your entry? You put your entry, you can either put it at the beginning, the top of the gap, you can put it at consequent encroachment, you can put it at the fill. I missed one where it short changed me. It barely, like, I had my entry at the end of the gap, right at the bottom, all the way at the bottom, okay, of it, and it just missed me by a tick, and I missed a massive move where I would have loaded up and made lots of money. So I started putting it at consequent encroachment. Okay, this is where I leverage into trades a lot. If I'm not working on a new funded account where I'm very confident or I have an evaluation, I'm gonna load up on it. I'm gonna take little to no drawdown, especially if I put at like consequent encroachment. How much drawdown would we take? 7 points. Okay, if you put it at the end of the gap, like say you put it at the bottom, that's your entry. You're taking 4 points, and boom, you run it for 50. It will always hit 50. Don't anticipate that it'll always go plus 50. Okay, I've seen it go 50 and come back down, take a low before. So once again, 50 points, easy money. Keep it simple. It could run higher, but why do you need any extra? Why be greedy? Okay, because it could have went up 50 points and then come back down. All right, now I got out a little bit early on my funded futures. I was being very, very cautious and trying to manage risk. Okay, one thing you could do is you can have your stop follow up each candle. Okay, if you get a candle close, not with a wick, but if the candle closes below the previous candle with its body, you get out the trade and play it safe. Okay, so you can see these live executions. This is how you could have approached these with perfect, discipline and entry and exit strategies. But you had the double dip entry right here. The market came down. You can be at consequent encroachment. You can be at the top. When I'm not over leveraging, right, or I'm not building a massive setup or trade, I just put it at the top because I just want to make sure I get tapped in. If I'm putting on a lot of money, I'm going to put it at the bottom of the gap or the top if it's doing the opposite. Okay, so I enter in, I put my stop loss at this prior low. I wait for the inversion. When I get the inversion, I can move my stop loss up at this most recent low right here. Okay, once we get the advanced market structure shift, guess what? I can go to break even. Okay, or not break even. I can move my stop up a little bit higher. Okay, and when we start pushing up, you can go to break even, and you can manage. There's all different sorts of ways you can manage it. Then you get your take profit at 50 points. Now you're not looking for an entry in this setup, the third setup, at the inversion or the advanced market structure shift. You want it at the double dip. But the inversion and the advanced market structure shift is giving you extra confirmation that your idea is going in your favor. So there's many ways to skin this cat, man. But the beauty of my signals, okay, is that it's going to show you how this thing is moving and how you can take advantage of it. There's many ways you can go about this. There's many ways you could have went about getting in on this first setup and getting out. There's many ways you could have done it here, believe it or not. Yeah, you could have gotten more take profit or let a partial run or get an entry, early entry a little bit in the inversion, add on at the advanced market structure shift. Same thing here. Lots of different ways. You didn't have to get into the double dip. You could have waited till you got your inversion signal in your advanced market structure shift, and you still would have got a fairly nice run. Many ways to play this, but this double dip is my favorite because it gives you all these different setups in one session. Okay, I know we got to come back. We got this nice move, breakaway gap. We go up. I know we're probably going to come back down. If we get a signal, most likely I can play another reversal. And then we come back down here, we double dip, boom. I get an extra 50 points. Maybe more if I want to play it that way. Imagine if I was patient to let one run after that, right? Let one run after this. Let one run after this. I'm not even scraping the surface, you guys. So you can take this to the next level. It was a beautiful day. This is what trading is about. I will put the third live execution up. There's breakdowns on these already. The live executions should be attached to the description below with the link. But the third execution will be on this video in the description and the link below. This is Havoc. Comment down below, like the video, subscribe. God bless. Hope y'all doing well. Election day tomorrow. It's going to be interesting. Peace.